Friday, everyone. My name is George Lee, CEO of Startup Hut, and this is the third episode of Startup Hut's live-streamed investing show, Pitch Party, and I'll be your host for this evening. For those of you who have tuned in the past, welcome back, and for the newcomers out there, thank you for joining us. If you're new to Startup Hut, I'll give ourselves a quick shout-out. Our sole focus is to create opportunities for entrepreneurs to access capital, mentorship, customers, talent, and more. I know firsthand how hard it is to start a company, and our goal is to provide support, education, and connections to awesome entrepreneurs. Now, obviously, I can't tackle all this by myself, so I wanted to extend some thank yous before we get started. First, to the startups participating in the show, to every single one of you tuning in live, or are watching the recording on YouTube, we appreciate your time. To our partner and amazing equity crowdfunding platform, Wefunder, we thank them as well. Some of you might know who they are, but just in case, they are a leading crowdfunding platform that connects startups with investors and is predicated upon the idea that anyone, regardless of wealth, whether you're accredited or unaccredited, should be able to invest in a startup company, which opens up tremendous opportunities for returns historically reserved for the elite few. And lastly, a big thank you to our expert panelists for this show. Conrad Holloman, I met him a few years ago when he was a program manager at Techstars Air Force and is now a senior technical PM at Unity. And I'm thrilled to have back on the show the CMO of Mana, Rachel Abady, a former Pitch Party participant and whose team raised a successful Wefunder campaign. Thank you to everyone I just mentioned. None of this would be possible without you. Tonight, we have 3 startup pitches lined up for you to watch. After each pitch, there will be about a 5-minute Q&A where each panelist will ask a few questions, and if there's time, we'll source audience questions so everyone watching at home can participate in the chat. Hopefully, the companies will impress you enough to warrant checking out their Wefunder page. If so, there will be a link following each pitch and Q&A where you can check them out. Everyone out there in the audience, I encourage you to use the chat. If you don't have a question, that's totally fine. Comment something nice, point out any observations you may have, and pay it forward by introing them to someone who can help them along their journey. Okay, let's dive into our pitches. First up, we have GigKloud.
Hi, I'm V. William Zero. I'm the founder of GigKloud. GigKloud connects businesses with on-demand labor. Think of us as like TaskRabbit, but for SMBs. We focus on companies dealing in construction, fulfillment, moving, and events. The number one challenge these companies face is finding a way to balance their daily labor needs with their current business demand. Today, they're solving this by using temp staffing agencies, an archaic business model that creates as many problems as they solve. These agencies dictate to the employers what wage must be paid, and employers don't even get to select which workers show up to their job site. Worst of all, these workers only get to take home 60% of what the employer is charged. Additionally, it can take as long as a week to onboard with a temp staffing agency. With GigKloud, onboarding is done in just minutes. Employers can post jobs by the shift, set their wage, and select the workers that they like, and extra help can arrive in as little as 2 hours. The best part with GigKloud is our workers take home 88% of their wages.
In our closed beta with paying pilot customers, we're seeing incredible success across all key metrics to date, including an 80% compounded monthly growth rate over the last 7 months. The average employer on our platform spent $4,800 last month, a 1,000% increase year over year. The total marketplace volume is up 262%, and the average gig value rings in at $163, a 45% increase from this time last year. There are hundreds of thousands of employers that meet our ideal customer profile, and we've built a replicable sales engine to acquire them. Millions of workers are seeking fractional employment. We haven't even opened our app publicly yet and have a waitlist of 15,000 names eagerly awaiting access to the GigKloud marketplace. Our future market opportunity is massive, going beyond just SMBs and expanding into enterprise-level clientele, and the competition is ripe for disruption.
Our competitors are temp staffing agencies that are just now adding tech to their solution. GigKloud is a tech company that is attacking the problem from a fresh outsider's perspective. We're ready to open our platform to the public and begin a national expansion. And with your help, we can begin disrupting a $132 billion temp labor market before they even know it hit them. Thank you.
Thank you so much for considering an investment into GigKloud and the future of the gig economy. If you have any questions, ask them in the Q&A below, and William and I will make sure to keep you in the know every step of the way.
Okay, folks, great pitch. We're going to be moving into a Q&A session right now. So how about we start with Rachel? And also a note for the audience, for those watching, you can ask some questions in the chat, and we'll get them onto the panel once the panel's done. Rachel, you're muted.
Hello, I'm muted. Sorry. Hi.
Happens to all of us. Hi.
I thought your pitch is really interesting. I just had a couple questions about how you vet your employers rather, and your workers.
So, great question. First, thank you, George, for having GigKloud on. Thank you to Startup Hut and our honorable panelists. So we vet our employees. We don't do it in the traditional way. When an employer posts a job on the app, it shows up in our mobile app, and then any worker who has access to the mobile app can then select that job and apply to it. Now, every worker has a profile, and on their profile, they have reviews from previous employers. They have badges, which virtualize any skills and credentials that they've had. So if they have a new NYC food handler's license or something like that, or an OSHA 30, they upload it, they get a badge for that. And they have a profile description where they can talk about a little bit of their experience. Now, it's still the responsibility of the employer to look at the profiles and select the person that you like. But we try to provide the tools to make that easy for you.
Cool. And then I actually had one other question. How did you guys build out your big waiting list?
Yeah. So I posted an ad on Craigslist way back in the beginning, and it said, earn money, change the world. We're GigKloud. We're this new gig economy app. If you want to try something new, and I posted it on Craigslist in the gig section. And we would get 300, 400 people a day going to the website and putting themselves on our waiting list for the app all around the country. It got to the point where, we're a marketplace, so it got to the point where we have this chicken and egg problem where we have to maintain market liquidity and balance the demand side with the supply side. So a lot of the people we had to keep on the waiting list. We couldn't just let thousands of workers go into the app when we don't have thousands of jobs available. But yeah, that's how we did it.
Awesome, congrats.
Thank you. Well, at least initially. Next step will be to, when we open publicly in the App Store, then it will be by invite.
Awesome.
Thank you.
Right. I just have a couple of questions. So when you open up on the App Store, what do you see as the, so tell me a little bit more about the business model after you open up, and a little bit about how you're thinking about the business model, let's say 2 years after you've opened up. Sort of like the short-term horizon for how you're making money, and then the longer-term vision of how you, after you've gained that sort of like marketplace, you got the two-sided marketplace problem. So like after you get the sort of population that you're looking for, how you're looking at making money when you've got that critical mass.
Yeah, great question. Thank you, Conrad. So first I have to clarify where we're at right now. We're still pre-product market fit. We're a small team. It's just me and my co-founder, Joseph Marchioni. He handles the sales, I handle the tech, and we do everything else together. We have a great team of advisors, Diane Mulcahy, who literally wrote the book on the gig economy, and another individual, Chase Emmanuel, who helps us with our operations strategy on a bi-weekly basis. So we're currently the app is only available in New York City to our beta testers. We have expanded into LA, into Miami, into Chicago, into San Diego, but only in the beta test capacity. So right now, the only way to get the app is to be invited into the beta test, and then we send you a special link to download it. Now, we have that problem of when we open it up publicly, we still have to keep a gate so that just anybody can't download the app, because we've noticed some of our competitors that are ahead of us, they allowed that. Anyone can download the app, and now you have 10,000 people competing for 5 jobs. So what we've decided to do when we do open the app, when you click sign up, you download the app, you click sign up, there'll be a wall, and it will say, put your invite code. So now we're going to transition from, hey, I'm an employer, I just need anyone off the street who can do this job, to, hey, I actually have a trusted group of employees in my Rolodex that, normally when I need extra help, I go down the list and I call them because they're not my full-time employees, and they're not even part-time employees. They're just people I call for extra help. To now I use GigKloud for that. To now, hey, I'm going to invite them to GigKloud and let them send them an invite code so they can download the app. Maybe that's a little long-winded. I'm sure that's not exactly what you're looking for. That's a little long-winded and probably too detailed for what you're asking. But today we're focused on 4 industries: fulfillment, construction, moving, and events. And we're doing that because we're trying to find our product market fit. Which industry can we see the most traction in, so we can go deep and narrow in that industry and then focus on that. So there's still a lot of unknowns because we're still, so early.
Awesome. Let's get one last question in, and then we can move on to the next pitch.
The other question I guess I would have is, of the geographies that you've looked at and the verticals that you looked at, what do you feel the most excited about, and why?
Oh, that's a wonderful question. So recently we had a discussion with a company that owns 95% of the Dunkin' Donuts in New England, because we wanted to explore the QSR space, the quick service restaurants. Right now, quick service restaurants, they're really struggling with finding workers. And we proposed to them, when we surveyed a couple of QSRs, and this guy in particular, he told us that on average, they're short 1 staff member a day, every day of the week. And they have some 30-odd stores. When I ask them, how are you currently solving this problem? They say, well, the only way we solve it is if we don't find someone, we close the store early. Which is just incredible. And then when I ask, I'm sorry, I don't want to get off topic and get focused on that survey, but essentially we're really excited about the potential to explore the QSR marketplace. The beauty there is that all of their workers, everything they do, highly standardized. If you can work in a McDonald's or a Burger King or a Dunkin' Donuts in Boston, you can do that exact same job in LA or San Francisco. You don't need any special training. So all you would need is your Dunkin' Donuts badge or your McDonald's badge. So there's a lot of big opportunity there. No, it's green pasture. Nobody's doing this. So we're kind of excited about exploring this space.
All right, awesome. Thank you so much to GigKloud being on our latest pitch party. Here we have on our screen, real quick, a link to their Wefunder, page. So if you, are satisfied with their pitch and their Q&A, and you want to support them, the best way you can do that is to go onto their Wefunder page. So next up in the hut, we have Commodore Hospitality, and so let's start their pitch.
Hello, my name is Chris Bazance, and I'm the CEO of Collection.
And I'm Eric Bergen, the chairman and co-founder of the Commodore Collection.
Historically, investing in real estate has been reserved for the ultra-wealthy. We have come up with a platform that allows anyone, regardless of net worth, to be a part of these investments.
Because of this regulation expansion, we saw an opportunity for emerging investors to own a portion of a hotel portfolio. Prior to this expansion, young investors had to choose between investing or traveling. But with the Commodore Collection, we eliminate that problem and you can do both.
The Commodore Collection is an up-and-coming hotel brand based in the South Central region of the United States. We are currently raising capital to acquire, renovate, and manage these boutique hotels.
You will have the opportunity to invest for as little as $250. This one-time investment secures your lifetime VIP status at any of the locations across our portfolio. For every $100 invested, you receive $33 back in annual recurring hotel credits up to $1,200 per year. At the beginning of each year, your hotel credits will be added to your account and you can use them at any of our hotels.
On top of securing lifetime loyalty benefits, you also will share in any cash flows from the hotels, distinguishing us from our competitors. The combination of earning unique perks, potential returns from cash flow, and sharing in any profits from the sale of the hotels all make for a one-of-a-kind investment.
Timeshares are a thing of the past that have more restrictions than they do flexibility. The Commodore Collection eliminates these restrictions, such as locations, availability, and budget. Your investment allows you to stay at any of our locations at any time. With the Commodore Collection, you have the freedom to travel to any destination of your choosing within our portfolio.
As for where we are currently in the process, we have recently begun taking early bird reservations to raise capital and begin acquiring our hotels. We've also determined several amenities that we intend to provide in our hotels, as well as have lined up several service providers to help us give our guests the best experience possible while staying at our properties.
We have made a name for ourselves in the commercial real estate industry through our 20 years of experience. We have been able to identify inefficiencies in traditional hotel operations and aim to overhaul the hospitality industry.
Why choose between investing or traveling when our investment vehicle here at the Commodore Collection allows you to do both? Visit our Wefunder at wefunder.com/Commodore to reserve your investment.
All right, great pitch, guys. I'm going to open it up. Conrad, this time, why don't you take your first swing?
Yeah. Okay. So this is really interesting, and I think what I'd like to get the best sense of is in the region that you're operating in, what most excites you about this particular area of the United States, and the potential that it has, especially right now. You got ideally, knock on wood, COVID kind of letting up a little bit, people starting to travel more, and you're focused on this particular region. What excites you most about the coming months?
Yeah, I'll take this first one. So kind of the South Central United States, so Texas and Louisiana in particular, are some of our strongest targets with the major cities in those areas. Kind of you hit the nail on the head on one of the main reasons we're excited about it, and that's that COVID restrictions will be lifting. They already have largely lifted. And so we think there will be a return to hospitality, a return to travel, both for leisure and for business, which creates a strong business case for why we would invest in hotels in this region. A further reason is we're in Texas. Texas and this region in general is our backyard. These are the markets we know the best. We know where people want to go in these markets. And so that's led us to say, hey, on this first fund, let's focus on this region and then build out our company here first.
Gotcha. And one follow-up question. So as you go through this process, you've looked at and identified a number of amenities that you're evaluating to add value in your portfolio here. What led you to look at these amenities as having the highest potential value?
Yeah, I'll take this one too, and Eric can take the next one. But as far as these hotels are concerned, so a lot of hotels have a lot of unused space. There's a lot of stuff that people don't end up using. You go to a hotel and it has, meeting rooms that a lot of times you go in there and it's empty. A lot of these amenities we're looking at, we're planning on repurposing some of those rooms and making them kind of attractions within themselves. As we've tested the market, we've gotten a lot of feedback that people want to be able to experience the cities that they're visiting from the hotel itself. And so our objective, whether it's through bringing a in Austin, a barbecue food truck to the front of the hotel, or even some form of game room or local artist or something along those lines as an amenity of the hotel, people are drawn to that, especially our target market, which is that age of 20 to 45 years old. So we're really trying to appeal to that market, the concept of having a destination in and of itself at the hotel. And we think that's going to drive a lot of demand to the hotels we're acquiring.
Awesome.
Hi, guys. Yeah, very cool. Very interesting. Well, Conrad, you stole some of my questions, so I have to think of new ones. But my current new questions. So yes, COVID is changing and hopefully changing for the better for a while, but it still means that places like hotels and hospitality have to think about how to keep spaces safe. How are you guys thinking about that? I think part of successfully marketing this investment travel is telling people that they will be safe. Like how do you guys approach that?
Yeah, definitely. I think, first off, with our business plan, we are going to be acquiring these hotels and then, renovating these hotels. And so, really, we're not going to be ramping up the occupancy until, a year or two down the road. But yeah, we're working with, property managers, right? So we're going to be outsourcing all the property management aspects. That's not our expertise, right? We're really good at underwriting the hotels and the asset management side of it. So we're going to be outsourcing the property management side, and definitely we're going to be looking at, making sure that those property managers, the boots on the ground, are, they have all the safe, clean rooms, and the cleaning the rooms and doing the maintenance and everything that's in accordance with what we should be doing, related to COVID.
Yeah, I have a company I work with called Test Zone that does exactly this. I'm happy to put you in touch or send you more information because they're looking for new partners. Number one. And number two, what you said about the hotel being attractive as a destination itself and sort of bringing things in, while I agree that it'll definitely attract certain people who like to sort of stay on campus, if you will, in the hotel, do you guys have visions for partnerships or like kickbacks that you can do with like experiences around the city? In my opinion, when I go to a hotel, a good hotel is one that can help me like experience my surroundings, not just stay at the premises.
Yeah. So exactly to what you said there, not only do we want the destination in and of itself, but our target for what we're doing with these hotels is to create an upper upscale. That's the technical term for it, hotel. And so part of that is concierge, a competent front desk that can help you if you want to go take a tour somewhere, if you want to go, what are the best restaurants to eat at, whatever the case may be. We want the employees we have at the hotel to be very helpful in that way to help you experience the cities that you are actually going to.
And then my final question is, how do you plan, Wefunder is great, but how do you plan on like marketing this to people? Like I, for instance, could be like a potential target demo person. Like, how am I going to learn about this? What is your strategy for sort of getting this out?
Sure. Yeah. Right now we're in the testing the waters phase, right? So we're not officially registered with the SEC yet. We're getting some comments back and forth, but right now we're focused mainly on social media marketing. So we're doing some A/B testing and mostly focused on Facebook and Instagram, and trying to narrow down. And I think we have narrowed down, who our target audience is and what ads they're responding to, and then from there, we can just, pump more dollars into the marketing side now that we have that figured out. But we've kept our marketing budget very small right now, and we've, gotten a good amount of investment so far. And so we're very optimistic that once we increase the marketing budget, specifically on Facebook and Instagram, that's going to, really get this going, plus the native Wefunder audience. But really, we're from our point of view, we don't want to rely strictly on the native Wefunder audience. We got to get outside investments, and we're going to do that through social media, which, our target audience, they're active every day on social media.
And
Cool.
We have a question from the chat, which is kind of related to this. They're just asking for kind of a use of the proceeds from the Wefunder campaign. And so maybe you can provide like a high level kind of discussion about that.
Yeah, and a lot of this information will be in our final SEC doc. We have to be careful to limit what we say just based on SEC regulations. But if I was to break it down into a picture, there's a portion of it allocated to startup costs. And we've done a very good job when we've been building this out to negotiate very reasonable fees on everything that we're doing. And so our startup costs will be a sliver of it. marketing is the biggest component of that startup cost, because, you know, if we're raising $75 million, we have to do a lot of marketing. And so that goes to what Eric was just saying. We're getting the highest ROI right now. We're trying to zero in on that, so that when we have to actually start using investor dollars to do the marketing, we will know that that is going to generate the proper ROI to get us to the full amount of capital we're trying to raise. So that's that. And then the vast majority of the rest of the capital will be spent acquiring and renovating hotels in the region we're targeting. We will set a little bit of cash aside as a reserve cushion to make sure that if at a hotel something critical came up, we could go, you know, if COVID-2 came up or something like that, we would have the cash on hand to be able to cushion that, and then negotiate with our lenders and so on and so forth to make sure we don't fall into an operational issue there.
Awesome. So we're going to move on to our next pitch. Thank you so much, Commodore, for being on. Now on the screen, you'll see a link to their Wefunder page where you can get a lot more information about their current raise. Thank you so much, Chris and Eric. And now on to our third and last pitch, Chisos Capital.
Thank you.
Hi, my name is Will Stringer, co-founder and CEO of Chisos and Chisos Capital. Chisos is building an investment platform to provide capital to pre-traction entrepreneurs around the globe. We're providing capital today of $15,000 to $50,000 using a convertible income share agreement, which is a combination of an income share agreement with the founder and equity in their business. The problem today is that 83% of founders are not served by today's capital providers. Less than 1% of companies receive funding from venture capital. Less than 16% of companies receive funding from banks. The rest of that 83% has to rely on their own personal savings or friends and family network for investment. And that's just not available to most entrepreneurs today. So Chisos is building the platform to provide that capital. Today, we're raising our own funds and deploying our own capital that we raise into those opportunities. As we scale our platform, we look to partner with universities, governments, or other cities and angel groups to allow them to set up a convertible income share agreement program, which allows them to deploy capital at a higher rate in smaller dollar values to more entrepreneurs. In those situations, we would be providing that software to those groups, the software that we've developed internally to help us source, underwrite, and service these opportunities. We've raised close to $1 million. 500,000 of that has gone into our Fund 1, which has invested in 11 opportunities to date. We've collected about $25,000 of ISA repayments to date, and we're currently raising our $10 million Fund 2 to continue making those investments. Our team is made up of financial and investment professionals, as well as technology professionals that have built previous software solutions before. Today, the ask is to check out our Wefunder. So we're raising $1 million on Wefunder to help grow our team and support the development of further iterations of our software. So check us out at wefunder.com/Chisos.
Thank you so much. Why don't we start with Rachel and then move over to Conrad for this.
Hi, Will.
Hi, good to meet you both.
Good to meet you. This is really interesting. I had a couple. Well, first, I would love to hear more about the software and tech itself, what it is now, and what your plans are for it.
Sure. So today it's kind of a mix of no code and low code tools that allow us to efficiently kind of source applicants using our open application, automatically move them through the first couple phases of our evaluation, where they give us information on their business, themselves as a founder, and then additional kind of credit information to help us underwrite them. On the back end, on the servicing platform, we've just built systems to monitor payments and process payments as ISA payments are required.
Cool. And then one other question, who's your target demographic when it comes to entrepreneurs? Like what kind of businesses and people are you looking to invest in?
Yeah, really industry agnostic and pretty open, but two main criteria, scalable and capital efficient. Because our check sizes are relatively small, we want to make sure that that check can get them to the next level, whether that's generating revenue or getting an MVP out the door. So capital efficient and scalable is really what we're looking for.
Cool.
Hey, so I'd like to understand a little bit of the opportunity score and sort of like how you're thinking about underwriting here. 'Cause you mentioned you're using kind of like low code and no code tools, and I see from your team kind of like the background that you're having on the business and the finance side. I don't want you got your secret sauce. I don't want you to have to like show too many ingredients to your secret sauce. But what kind of led you to these criteria? How do you think about these criteria? And how, like, given the kind of early traction that you've had, how has that changed, if it has, how you've thought about things from when you started this process to now that you've engaged with a few different entrepreneurs and a few different investments?
Yeah, I'd say in general, we've made probably 5 iterations on our kind of scoring algorithm. And really, it's just making it more detailed. So pulling information from organizations like Gallup and looking at how they view entrepreneurs, view the qualitative and kind of psychographic profiles of entrepreneurs, taking their best practices and implementing it into our own scoring algorithm. We're really looking at 3 main buckets of information. One is their business, the founder's business, very kind of high level VC type diligence. 2 is the founder and credit related information. And then 3 is that founder kind of psychographic qualitative profile that we're looking to see. Is the founder, do they have the grit, do they have the leadership qualities, the hustle, the ambition, etc. And we really risk weight all of those factors to get to that Chisos score that helps us stack rank all of the opportunities that come across our desk.
Okay, and one additional question. So for the CISA, I don't know how you'd like prefer to describe it, model that you're talking about. I'm seeing the components. I'm familiar with like kind of the individual breakdown, but I'm wondering, like, kind of in your own words, for somebody who's less familiar with this model, how would you describe this for folks who are watching, if they just need to get the high level overview of what's different about this model and how this offers opportunity both for them as investors, but also for the folks that you're investing in?
Sure. That's a big question. I'll try and keep it high level. So for the entrepreneurs, they can think about it as 2 pieces. It's an income share agreement with themselves, with the founder, and that requires repayment in situations where their personal income is over $40,000. So typically when they're starting their business, they're not paying anything. They don't owe anything at that point in time. And then the SAFE is a pretty standard SAFE, which just gives us equity in their business. There's some interaction there by which the founder can reduce the amount of equity they owe to Chisos. They can also reduce the income share agreement repayment cap, which starts at a 2x. They can bring it back down to 1.5x, or they can bring it down to 1x in certain situations. So there's some founder-friendly features in there. As for the investors, the way that we can kind of convince investors that, hey, this asset makes a lot of sense is because we come with them and say, look, this income share agreement gives you cash flow. It gives you a bit of downside protection. And you have this uncapped upside in a large portfolio of early stage companies. And statistically, we're going to have some successes on the equity side of things. And so you're kind of early stage seed investing, but you have some cash flow and some downside protection, which is a fairly attractive pitch to family offices, high net worth individuals, or just investors looking for cash flow or equity exposure. Hopefully that answered the question.
Thank you.
Awesome. We have some questions from the chat, so we'll just slide over to that. Crowd Cheddar asks, are you in alt VC fund? And maybe, kind of a follow-up to that as well. Maybe you can describe where you see yourself fitting within the traditional VC space. Just
sure.
Fundraising space in general.
Yeah, the alt VC terminology, not a super clear definition of it, but I would say, yes, we fall under that. Kind of along the lines of, an indie VC or an Earnest Capital or some of these other really cool capital provider groups that are innovating on the traditional model. I'd say we fit really at the earliest stages. If you think about it as a spectrum, you've got friends and family, assuming a founder can raise some friends and family capital. You've got us that can come in either in addition to friends and family or in place of friends and family. And then what we try and do is really help the founder start gaining some traction so that they can go to angels, raise some rounds, even go to crowdfunding platforms such as Wefunder and start raising from their own, the crowd or their own customers. We see ourselves as pretty complementary to the entire fundraising or startup capital landscape.
Awesome. Equity Zach also asks from your perspective, why would investors want to be investing using these convertible ISAs? And then also maybe like a follow up to that as well is like, what is like your upside in this?
Yeah. So on the investor question, I kind of touched on it earlier, but really it's in my opinion, a pretty simple pitch. It's, hey, there's this massive opportunity at the earliest stages of business creation where there's no capital available, but there's a lot of talent that is building these businesses. And so we can come in, provide that early stage capital, help them level up or get to the MVP. And we're coming in at a pretty attractive valuation on our equity component. Plus we have the cash flow component of the income share agreement and the downside protection of the income share agreement. So for investors, it's a pretty attractive option here. And then in terms of upside for Chisos, so really we're building the software platform. And today we're raising our own capital to put through the software platform and invest in opportunities. As we start to grow and as we start to get a bit more track record on the instrument, the convertible income share agreement, we see a pretty clear pathway to have conversations with universities, other foundations, or even municipalities to implement this early stage CISA program within their jurisdiction or within their ecosystem so that they can boost entrepreneurship, whether it's at their university or in their city, in a low check size, high volume manner that can just generally provide them with that benefit in their ecosystem.
Awesome. Thank you so much, Will, and Chisos Capital for being on. Really exciting stuff that you're doing. We have a couple more questions, but where someone could potentially ask those questions and more, that you can check them out at wefunder.com/Chisos to learn more about these guys and what they're, the awesome work that they're doing. So thank you so much for you being on, Will.
Thank you so much. Appreciate it.
Well, awesome. Thank you, everyone, so much for being on and watching these three awesome companies pitch. Thank you so much to Rachel and Conrad for taking time out of their busy Friday evening. I really want to wish everyone a really great weekend. Go out there, barbecue, do whatever you want. Hope the cicadas don't bother you too much. And I hope that everyone has a wonderful weekend. Have a good one.
Thank you.